Good morning, everybody. My name is Jide Odisholu, and it's my pleasure to be with you this morning to share my quick thoughts on Proptech in Nigeria. So, what I'm going to be doing is running you through the Nigerian market, the opportunities the Nigerian market offers, and the way Proptech, in our opinion, can actually change the narrative of the Nigerian market. The Nigerian market is somewhat opaque to a number of people. While it is like something that struggle to understand the potential of that economy. Everybody now knows more and more of what the potential size of the market is. So Nigeria, as of today, has a population of 201 million people projected. The working population, which is between ages 16 to 24, 122 million people. Urbanization rate is about 50%. For 2020, which was the COVID economy worldwide, Nigerian economy, which remains the largest in Africa, was rated as being $442.97 billion in size. The economy suffered a 1.92 contraction in 2020, which was much better than earlier projected. Interesting to note is that 70% of the Nigerian GDP is generated in the informal sector, while 40% of the population, which is quite large, actually live below the national poverty line. The national poverty line basically is anyone who lives on less than $300 a day. So it is a large population that is below the poverty line, but put that side by side with the fact that you also have an equally large population that is actually doing okay. Mortgages are stagnated in Nigeria due to the highly informal financial structure system. While we have quite a lot of commercial banks, there's limited access to long-term credit, and that means that mortgages are not exactly quite popular in Nigeria. A lot of credit is driven through what we call microfinance banks, and these are people that do micro lending, and fintech entities. 50% of urban dwellers live in substandard rental homes. What we mean by substandard rental homes are homes that are underserviced with low infrastructure, excess density, poor road network, low hygiene. So these are challenges that make quality living a difficult task in Nigeria as it presently is. The combined housing, real estate services are 50% of construction sector. So construction is divided both into public utilities and actual development buildings. So 50% of construction sector and real estate services, which we believe is the real housing sector, accounts approximately for 8.5% of Nigeria's GDP, which technically is about $40 to $50 billion in size as of today. So the social income strata in Nigeria is quite sharp. So you either have you're either doing well or you're doing very badly. You could actually divide it into two broad categories: the upper and the middle income earning category, which is the smallest category, which is just roughly 13% of the population, and then you have the middle guys, that's the lower middle class, and that's 14% of the population. Then you have the bottom of the pyramid, which is 28% who are low income earners, and then you have over 45% of the population who are below the poverty line. Now, for the purpose of our presentation, we have projected the effective rate of exchange for the Naira at 500 to 1. The reason why we use 500 to 1 is to cater for the inflation rate, which is quite high, and the currently prevailing FX illiquidity situation in Nigeria, and the very volatile exchange rates that are coming up as a result of that. So in moving forward, what we like to look at is what the disposable income pyramid is in Nigeria. Now, what we call the disposable income pyramid basically refers to discretionary income. This is the money that's available to people in each category to spend on a daily basis after deducting or taking care of their core living expenses. Core living expenses, you're basically talking shelter, food, housing, food, educational costs, and all of those core costs. When you deduct that, What is left is what we call the disposable income. Now, the interesting thing is that for the upper class, which is 5% of the working population, the upper class actually have average of $40 a day in dollar terms as disposable income. This is money that they can just do whatever they want with. That's the money they use to buy soda. That's the money they spend on entertainment, on non-core feeding. Upper middle class has between $15 to $40, 39.99 cents a day, $39.99 a day as their disposable income. The lower middle class, which is 14% of the population, has between $6 to $14.99 available to them daily as a disposable income. The floating class, now what we call the floating class is everybody who is not in the upper cadre of the income strata and who is also not below the poverty line. The floating class, which is 28% of the population, has between $2 and $5.99 daily as disposable income, while the vast majority of people who are in the poverty, below the poverty line, have 6 cents, just 6 cents daily as their disposable income. And this is very stark, but at the same time, it would help you to understand where the opportunity actually lies in the Nigerian market. So if you look at the Nigerian market closely, what you would find is that approximately 27% of the population, which is roughly about 50 million people, are your effective, it's roughly 33 million people, the effective demand for the kind of services we're describing. You've got 33 million people potentially that you can actually upscale to. Now, while that is not good enough, knowing the size of the Nigerian economy, when you put it in the African context, it is quite huge because Nigeria is the largest population by population in Africa, and you've got 33 million Nigerians that are actually potential markets if you can unlock them. And that's the thing I want you to take away from this particular part of the conversation. You've got a potential market size of 33 million people. So how do you unlock the Nigerian real estate market? The Nigerian real estate market is, it is quite, just like the rest of the economy, the differences are stark. So you've got majority of people being tenants, 75% of urban dwellers are tenants. Only 25% own homes. 87% of urban dwellers live in rented apartments in suboptimal properties. And that also includes even people who are owning their properties in shanties. Essentially, that's what they are shanties. The major commercial cities in Nigeria are Lagos, Abuja, Port Harcourt, and Kano. And if you look at the economic profile of each of those cities, you find that Lagos has an outsized impact, followed by Port Harcourt. And then you have Kano and Ibadan and Abuja also being the major triggers. What essentially means that any development, any solution, any service that wants to scale in Nigeria has to scale in any of these 5 cities to actually be viable. So the economic realities of housing in Nigeria, this is very, very simple. What it basically shows you is that approximately 10 million Nigerians have monthly discretionary income of above $500 a month. Now, we've said that as a trigger point because when you're talking about housing, you're talking about your monthly payment plans. This is the sweet spot. These are people who can spend about 250,000 naira monthly towards home ownership on a monthly payment plan basis. Approximately 90 million Nigerians live in homes priced around 20 million naira, which is $40,000. So if you're going to play in the Nigerian market, that actually should be your band. Homes priced around that number gives you the largest scale if you can make it work. And if they have access to flexible payment plans, 90 million Nigerians can actually afford such homes. The population density in Lagos, which I already mentioned to you earlier on as the largest trigger point in Nigeria, is 6,871 residents per square kilometer. Annual rent in Lagos for 85 square meter home, which is basically a 2-bed apartment, goes for about $3,000 to $7,000, depending on the location. 65% of Nigerians able to buy these $40,000, 20 million naira homes pay an average of $4,000 to $7,000 annually in rent to live in serviced communities. One common problem in Nigeria is that most homeowners are unable to unlock the value of their assets. And when you talk about unlocking the value of their assets, PwC, that's PricewaterhouseCoopers, did a survey where they confirmed that debt capital, this is trapped capital in residential real estate in Nigeria, is between 300 to $900 billion in value. That's money tied down that you can't unlock for various reasons, starting from titling to ease of transactions, to poor location, to disputes with owners. All sorts of factors basically trap that money and you can't unlock it. Survey indicates that most Nigerians will actually opt for home ownership if they could be guaranteed that they will get the product that they're buying. A major problem is a lack of financing, long-term financing. When we talk about long-term financing in Nigeria, we're talking about 3 to 5 year money that is available to buy homes. Now, we did a survey and we asked people what the greatest sectors of appeal for investment are. And interestingly, these are the core sectors that most people in Nigeria tend to put their money. For the upper class, they tend to put money in stock markets, they tend to put money in bonds and into real estate. For the vast majority of the working class, they tend to put money into trading, into private business enterprises, target savings schemes, crowd investment schemes. Of recent, most of the millennials are into FX and Bitcoin trading, which is now been outlawed by the CBN of Nigeria. And there's a growing interest in fintech and digital solutions. Now, the most interesting thing is that for everybody would love to own real estate. We did a survey and 98% of respondents actually picked real estate as their preferred investment area of choice. But then the flip side, almost all of them, 99%, said the greatest concern they have about owning property in Nigeria is a lack of transparency. So it's a highly informal sector, it's underregulated, and that scares a lot of people. So they put their money in short-term investments because they're afraid of loss, because they're afraid of being defrauded, they're afraid of buying property that they find later is under dispute, and all sorts of challenges. Now, I did mention that the Nigerian real estate sector is fairly underregulated, but these are the major entities that have some degree of influence in determining policies that drive housing in Nigeria. Of course, the biggest is the federal government of Nigeria that sets housing policies and that actually certifies regulation authorities. You have the state governments, with the Lagos state government being the major driver. It's the peer leader, when you say that in Nigeria when it comes to state governments, subnational government. So most other governments tend to ape and copy whatever has worked in Lagos. Then you have Central Bank of Nigeria driving fiscal policy. You've got the Federal Mortgage Bank of Nigeria driving mortgage policies. You've got the Nigerian Mortgage Refinance Corporation, which is kind of like Nigeria's own Fannie Mae that's meant to do secondary mortgage refinancing. You've got a new entity called Family Home Funds, which was set up by the federal government and the Central Bank of Nigeria to reinvest in affordable and social housing and to deepen the housing stock in Nigeria. Then you've got two private entities that are also heavily influential. You have the Real Estate Developers Association of Nigeria, REDAN, which is the umbrella body for developers active in Nigeria. And then you've got the Mortgage Banking Association of Nigeria, which is also the umbrella body for mortgage brokers and mortgage banks active in Nigeria. In Nigeria, you've got approximately about 100 major developers who are active in real estate. Now, major developers for our purpose are developers who have a minimum of 100 homes already existing under their portfolio, or who have minimum land bank of 25 hectares. Now, these are the players who have acquired credibility, not just by their profile, but by their past track record. Because you did note, I said earlier that transparency is a big challenge. So these are the major players that you have in the Nigerian real estate sector as of today. So what's the outlook for real estate in Nigeria? We believe that with the young professionals and the millennials who are the emerging market drivers, and they essentially 50% of the Nigerian population, they have preferences for multi-living spaces, especially 1 and 2 bedroom apartments in major cities of Lagos, Abuja, and Port Harcourt. The continuing volatility in the FX regime has made a unique opportunity available and a unique window available for attractiveness of Nigerian real estate to the diaspora market. Real estate investments, particularly in mass affordable and middle income homes, which are less volatile and less exposed to inflationary trend, would actually continue to be viable. We believe that increased desire for secure returns is actually what is behind the successful performance of real estate despite COVID in the last 1 year. Now, we're convinced that increased market awareness and desire for solutions has fueled the growth of this disruptive technology as far as real estate is concerned, and has created a huge potential market. So, coming to the core issue, how can property technology impact the Nigerian real estate sector? How can it be a catalytic change maker for the Nigerian real estate sector? We believe that property tech, just as what has happened with telecoms when the telecom sector was revolutionized in the early 2000s, we believe that property tech has the potential of revolutionizing housing in Nigeria. Fintech is the current darling of the investment market, and we've heard so many good things about fintech in Nigeria, and it's only going to get better. We believe that the same is possible with property tech in Nigeria. And the emerging areas of greatest opportunity as far as fintech in Nigeria are concerned are property portals. These are the predominant sector where a lot of people are playing in the fintech sector now, property portals, virtual reality tours and 3D animation studios, crowdfunding and investment platforms for people to invest in micro scale in real estate, community management and facility management tools, co-living and flexible living applications, blockchain, AI, and smart home solutions. Now, these 7 areas are the key areas of opportunity currently in the Nigerian property tech sector. Now, what we did was to do a survey of the major applications that are trending, if you could use that word, in the Nigerian property sector. And we've classified them into all the groups that we did mention. So in property investment, you've got our own app that's been launched called STOW. You've got One Square M, you've got Plot Pair, you've got Bungalow, you've got Co-Building, you've got Corium, you've got First Home, and a couple of others. For co-living, the biggest and most popular is Fiber. Then you also have Monster and Rent Small, also playing very heavily in that sector. For property and community management solutions, you've got Guest Pass, you've got Planet, you've got Gate Pass, you've got Shedler, you've got Resido, and you've got others that are also coming up. These are all applications designed to make FM easier for residential properties. For building construction, the 2 major applications that are active in the Nigerian market right now is iBuild, which is a solution to help developers to manage costs and do effective project management on their project, and 360 Human, which is basically a virtual reality tour app. Property portals and listing, which is the biggest sector right now in the Proptech, is quite big, and the biggest 2, if I can use that word, would be Nigerian Property Center and Property Pro NG. Of course, you have NAMA and a couple of others also coming along quite well in that sector. For data analytics, you've got RIG, you've got Notcut, you've got Estate Intel, you've got Neighborhood Review. These are platforms that basically help you to actually analyze and evaluate various developments before you put your money inside it. Of course, the last sector that should be mentioned is the short stay apartment sector. Now, these are all applications that various organizations have developed to play the Nigerian market, and they're doing well to varying degrees as far as real estate in Nigeria is concerned. So what is the impact potential for tech in Nigeria's real estate sector? To us, we believe that 1, it has the opportunity to revolutionize real estate transactions. Remember, I did say that transparency is a big problem. So with property tech, you can deal with issues of due diligence, you can make closings simpler, and you can reduce the risk of loss through litigation when it's properly engineered. We also believe that it would help to aggregate captive demand, because at the end of the day, demand actually is what we're all after. We want to get aggregated demand that makes it possible for us to make proper projections as far as the sector is concerned. We believe that digital is the new normal. COVID has actually fast-tracked that whole process. So you find that more and more developers are using virtual tours and relying on project management tools. And let me say this, Amazon has done a fantastic job of showing the pathway to follow, because Amazon has basically taken the old world and merged it with the new world and created products that everybody actually uses all over the world today. So we believe that real estate has a reputational deficit, and that's due to the lack of transparency. However, with use of Proptech, we believe that data aggregation, increasingly transparent processes will lead to efficiency and quality standards. And these are for us, these are we could use the word 9 key objectives that we've set for ourselves, and that's what led us to create STOW. So what is STOW supposed to do? STOW is an application that we've created as a demand application, as a demand aggregator, to enable people to unlock their potential as far as real estate in Nigeria especially is concerned. What STOW does is it actually creates a digital marketplace for new build and off-plan homes. It is not a property listing application. It actually is an application for people who are looking to go into home ownership investment, partner with developers to buy into new build homes and off-plan homes, which is really the sweet spot, because you get in early and you're able to actually get the maximum returns. So what we've done with STOW is to create a one-stop shop that makes it possible for that to happen. What we want to achieve is that with accredited developers, we'll be able to enable delivery of homes across various locations in Nigeria and provide flexibility to prospective homeowners and investors to buy those homes on structured payment plans and fast track more Nigerians becoming property owners and landlords within the defined time period. We launched STOW in October 2020, and with limited marketing and limited advertising, we now have over 1,500 subscribers onboarded onto the application already, and many more are actually downloading it on a daily basis. Most interesting part is that we have a large number of people in the diaspora market who are also buying into STOW, and through STOW, buying into the various projects that are being launched. So what does STOW do? STOW allows you to track and view the progress of work on any projects that you're buying into. It allows you to make purchases via the app. We have a partnership with Paystack. So Paystack is our back engine for processing all payments on the application. So it allows you to make payments without having to go through any middleman. It allows you to choose plans that are competitive, that are most convenient to your cash flow. So what STOW does is it allows you to design a payment plan for yourself, to buy a home for yourself that actually is tied to your cash flow. And you can actually ensure that you then can follow through on it consistently. It makes e-documentation easy. So with STOW, all your documentation is done electronically, it's signed digitally, and until the point of exchange of keys, you actually do not need to engage with any human being. You can actually engage through the application itself. It also makes it possible for you to do self-eligibility assessment for mortgages, because what we've done is we have a back-end tie-in with Nigerian Mortgage Refinance Corporation's mortgage marketplace. So with STOW, you have a back-end that you can actually use to be able to process and evaluate yourself for mortgage plans. It allows you to track your own payment plans and to get reminder prompts. And at the end of the day, what it gives you the best is control. So you know what's going on in the project that you signed on to, and you can actually monitor it and ensure that if at any point you're not satisfied, you can actually stop payment pending when it is then resolved. Now, STOW has been made available both as a web portal at stow.ng and on the Google app, the Google Play Store and the Apple Play Store. Thanks for listening. I'm sure you would have a number of questions and you might be interested in getting copies of the slide. So if you check at the bottom of this presentation, you'll see an FAQ, that's a frequently asked questions schedule, that explains more of what we're trying to achieve with STOW, and that also makes these slides available to you. If you need to get in touch with us, you can also send us an email at info@25.co or call us using +234 700 006 2865. So it's been a pleasure sharing this morning with you. Thank you for your time.